The second statement is the statement of income and expenses. Well, statement of income and expenses ni is actually very much similar, or it is equivalent to the income statement for profit organizations. Okay, we have seen income statement in other businesses before. We have looked at services companies, services organization, where they have the service revenue, all of the service revenue minus all of the expenses, they will get the net income. So that is actually will be shown in the statement of income and expenses as well for non-profit organization. In the merchandising operations, we have seen that they would first show the sales. They will minus the cost of goods sold to get the gross profit, and from that gross profit they minus all of the other expenses to obtain the net profit or net income. So again, the same thing might be used in the statement of income and expenses in non-profit organization. Okay. The income and expenses account, it compares between income items and against expenditure items. So they are in accordance with the accrual basis accounting. So their income and expenses statement recognizes those income that is generated for the year and the matching expenses that is needed to generate the income. The difference between income and expenses, okay, so at the bottom of the income and expenses statement, there will be a calculation to see the difference between the total income and the total expenses. So if the income is more than expenses, the balancing figure, the different figure will be given the header of surplus of income over expenses. However, if the expenses is more than the income, therefore we will use the title excess of expenses over income. Okay, so the first one will show that income is more than expenses, but the second one will show that the expenses is more than the income. All income and expense items for the period is accounted for, like I said, mentioned before. Number 4, capital related items are excluded. Okay, again, capital related items are excluded. I will explain in a different slide what is meant by capital. 5th, income and expense related to previous or following periods are excluded. Okay, so if the organizations have made transactions, cash transactions about income and expense, but for the previous year or for the following year, therefore it should not be included in the income expenses. Okay, the income expenses statement is following the accrual basis. We only recognize the income and expenses generated or accrued for the current year. Okay, under statement of income and expenses, there's the income part. Okay, there's the income section. So the income section includes amount received or will be received for the current period. The main the keyword here is the for the current period. That is the main keyword. So if the transaction is received at the current year but for the previous year or the next year, therefore it should not be included in the income expense. But all other amounts that is received or will be received, we have not received the amount, but we are expecting to receive the amount next year, but it is for a transaction or for the income generated this year, therefore it should also be included in the income statement. Okay, examples of income under the statement of income and expenses would be subscription, entrance fees, donations received, and profit from cafe. So if they have a cafe that they run some small business, profit from that cafe should be included in the income section of the statement of income and expenses. Okay, so this is a sample format of the statement of income and expenses. So on top here is the income section. So it has items such as subscription. So that subscription is those that is attributed for the current year, as entrance fees, donation received, and profit from cafe. And then income minus expenses, it totals up all of the expenses. Therefore, it will come, if the income is more than the expenses, it will be surplus of income over expenses. If the expenses is more than income, it will be excess of expenses over income. Okay, so expenses of the statement would include amounts paid or will be paid for the current period. Again, the keyword here is for the current period. Okay, so if payments made within this year but for expenses of the following year, that should not be included in the expense section in the statement of income and expenses. So examples include wages, electricity, and the others that we showed in the example in the format. So how do we prepare the income and expenses statement? So actually it's the same way as the income statement from profit-based organizations. Firstly, we need to identify and exclude capital-based item. Again, we should not include the capital-based income or expenses. Identify and exclude receipt and payments of items related to previous and following period. We need to identify those receipts and payments for the items related to previous year and following year. We need to identify them and exclude them from the statement of income and expenses. For those revenue that we receive for the current period, even though we have not yet received for the current period, that should be identified and should be included. Identify and include expense. If there's an expenses that we have paid or we have not yet paid but we have incurred in the current year, that should also be identified and included in the current year's statement of income and expenses. So I have mentioned several times regarding the capital related items. Okay, so capital here we compare it against revenue expenditure. What is meant by capital expenditure and what is meant by revenue expenditure? Okay, so capital expenditure is those payment that is made to purchase assets such as vehicle and office equipment that will be used to generate income for the club. Okay, so when we purchase long-term assets such as vehicles, such as office equipment, that we will getting the benefit for over 1 year. Okay, so that is called capital expenditure. It is expense in order to obtain a fixed asset that will be used to generate income. So that is called capital expenditure. Those kinds of assets can be depreciated. These assets will be shown as fixed asset. Okay, and the capital expenditure in this case will not affect business profit. Therefore, it should not be included in the statement of income and expenses. What about revenue expenditure? Revenue expenditure is payments made for assets and services to run daily activities such as rent, wages, and insurance. Okay, so sometimes you purchase prepaid insurance. That is considered as a revenue expenditure because it is used for running daily activities, being protected by the insurance coverage. Okay, so that is for daily. It is not running across multiple years, but for the shorter period of time. Assets are used in that accounting period. Okay, any assets that we purchase but is used in the current accounting period, that is considered as revenue expenditure. If those assets are used for multiple years, then that is categorized as capital expenditure. These types of assets cannot be depreciated. However, they are written off in the same year usually, unless there are some still balances. This expenditure will be debited in income and expenditure account. Okay, so these revenue expenditure at the end, they will be sent out to the income and expenses statement. Revenue expenditure reduces business profit. So because in the calculation of for non-profit organization, in order to calculate the surplus of income over expenses, we need to include the revenue expenditure as part of those expenses. Yeah.